Welcome back, traders. We're going to be talking briefly about 3 different types of analysis. Now, I know depending on where you read, you might hear that there's 5 or 10 or some ridiculous amounts of types of analysis. I like to break down the big ones into just 3 different categories. We're going to quickly go through it just so you understand what it's about, and then hopefully it'll help you figure out which one of these types of analysis you need to work on in order to further yourself and become an all-round complete Forex trader. The first type of analysis is what we call technical analysis. Now, this is by far the most popular type. It's the one which has so much information online. The majority of the courses that I teach covers technical analysis because it is the most used and it can be used in conjunction with other things. Basically, it is the study of price movement itself. That's a nice way of saying we're looking at the charts and seeing what's happening inside there. It's always based on historical data. So we're looking at all of the previous price movements and how things have been coming up, and using that we start finding patterns inside it. Now, these patterns could be based off things like ascending or descending trend lines, it could be in triangles, or we could be using various indicators to see what's happening, like the Bollinger Bands and moving averages and things like that. All of these indicators and patterns that you use on top of a chart still fall underneath the technical analysis category. This type of analysis is also considered subjective and is often up for debate. There is no clear-cut way because, while we say history repeats itself, and it very often does, sometimes it doesn't. And we're always trying to find what kind of pattern or what information was in there that could have told us that it would go the other way. So technical analysis is never a 100% sure guaranteed thing. All we are doing is increasing our chances of having a successful trade. The next type of analysis is fundamental analysis. In brief, this is what a lot of people just call news trading. It is the analysis of economic, social, and political influences. By using various different news reports coming out, this could be anything from speeches, it could be budgetary releases, monetary policy updates, that sort of thing. Or even if there has been a major attack in a city, or if a country goes to war, or something like that. Any sort of major news event that comes out, which will affect the strength of the economy in that country that you're looking at. One of the most popular ones that comes out from every single country that I trade is the unemployment rate, which is a fantastic news event because it gives you a very good overview on how well or how poorly that market is doing. If unemployment rate comes out as higher than what they expected, it means that the economy is not doing as well. There are going to be fewer people paying taxes, there's going to be more of a drain on the government, so the value of that currency would more than likely decrease. Whereas a positive outcome, so let's say unemployment comes out as lower than what was expected, then it means that there are actually more people employed, there's more jobs, there's more taxes coming in, and less strain on the government. Then the last one, which is not spoken about often enough, is sentiment analysis. Because trading is not an exact science, very often the larger community, the bulk of traders out there, the opinion of how they feel about a particular currency is as valuable or more valuable than the other analysis put together. So let's, as an example, let's say the charts are all showing that the US dollar is going to strengthen. The unemployment rate was low, it's coming off a support line, we get a great candlestick, but a lot of traders are still very worried about the outcome, and then Bill Gates comes along and says that he's also worried about the future of the US dollar and that sort of thing. It starts building up a negative sentiment against the US dollar, so it might actually go in the other direction. Now, there are ways to figure out what the general sentiment is, and some of the news reports will actually give you a report on what the larger community's feeling is towards a particular currency index, and that really can help you go ahead. Keep in mind that the market is a massive collection of buyers and sellers who are all interconnected. The last thing I saw, it was nearly 4,000 world banks are all connected that are trading on a daily basis. Now, that's a huge amount of money moving around. So it's almost like a giant living creature. And by using the sentiment analysis, we can see what is the overall perspective on a particular currency. Sentiment does not always follow what should happen according to other analysis. It can sometimes shift things completely in the other direction. So while I don't trade using sentiment analysis because you don't get any clear time of when to get in the trade and exactly when to get out, I do find that understanding the sentiment helps you confirm the direction of trades, and then you use the other type of analysis to actually hop in at the right time. So now, which is the best one to use? Here's a quick breakdown again of the three. Technical analysis is using the chart to determine the future change. Fundamental is using news events to make a prediction of the markets. And sentiment is how does the larger community feel about the direction of it. Have you decided which one is the best to use? All three. I bet you didn't see that coming. But seriously, folks, you can't rely on just one thing going forwards. It's fantastic to study and learn one of these things and use it as, say, your main. Like, let's say you are more of a news trader and fundamental is the way that you go and you have a lot of success with it. You would be crazy not to at least use technical analysis to help confirm the direction of the market and check the sentiment to make sure that you're not putting too much money in the trade. Or let's say that you are a pure technical analyst and you love the charting and you're very good at that. You would be crazy not to look at news events to at least safeguard your trades or tell you when it is a good or a bad idea to be trading. And then sentiment, that's the one that can really just move things around. So in order to be an all-round trader and to be able to change with market conditions and not just follow something parrot fashion and actually understand what's going on, you need to start looking at the three different categories of analysis.